$5,000 a month, completely passive. You've seen that video. Almost none of it is actually passive, and almost none of it nets what the thumbnail claims. That doesn't mean these income streams are fake. It means the marketing around them skips the two numbers that actually matter. Here are 5 income streams that actually pay: the real hourly numbers, the real tax bill, and what's left after both. No hype. Quick one before we get into this: if real numbers over hype are useful to you, hit subscribe. New video every week. Before any specific stream, one number changes everything. Any self-employment income over $400 a year is subject to a 15.3% self-employment tax, 12.4% for Social Security, 2.9% for Medicare, on top of regular income tax. A traditional employee splits this cost with an employer, each paying half. Self-employment means covering both halves alone. There's one piece of relief inside that number worth knowing up front. You can deduct half of that self-employment tax on your own Form 1040. The deduction exists specifically to approximately restore that balance. It doesn't erase the bill, but it's an automatic reduction almost nobody factors into their mental math when a $5,000 a month claim gets thrown around. If you expect to owe $1,000 or more in taxes for the year from this income, you're generally required to make quarterly estimated payments. Not just a once-a-year surprise. This is the gap between what a video promises and what actually lands in your account. None of this is unique to one platform or one hustle. It applies the moment self-employment income exists at all, regardless of which of the 5 streams ahead actually produced it. On a $15,000 side income for the year, that 15.3% alone works out to roughly $2,300 before regular income tax is even added on top. That's the number the passive income thumbnails never show. Before the specific streams, it's worth naming what actually counts as gig work in the first place, because it's broader than most people assume: driving for rideshare or delivery, renting out property or equipment, running errands or completing small tasks, selling goods online, and offering creative or professional services all fall under the same umbrella. The IRS defines the gig economy plainly, also called the sharing economy or the access economy, as activity where people earn income providing on-demand work, services, or goods, often through a digital platform like an app or website. Creative or professional services alone covers consulting, coaching, photography, tutoring, and freelance writing, a much wider net than most people assume when they hear gig work. A digital platform, in this context, is simply any app or website that connects a worker to a customer and processes the payment. That includes the obvious names. But it also includes a marketplace app for selling handmade goods or used items regularly. The label doesn't change based on how well-known the app is. A small niche marketplace with a few thousand users follows exactly the same tax rules as the largest platforms in the country. The self-employment tax and reporting rules from a moment ago apply the same way across all of them. Selling consistently through an online marketplace is treated the same as freelancing or driving for tax purposes. And the income is taxable whether it's paid by direct deposit, cash, property, or even virtual currency. Misclassifying this as a hobby instead of a business is one of the most common mistakes here. A hobby can't deduct expenses against its income, while a legitimate side business can, which is exactly why the deductions later in this video matter so much. 1. Skilled freelancing. Software work runs $50 to $150 an hour, marketing consulting $40 to $100, tutoring in specialized subjects $30 to $80. 2. Creative and content work. Graphic design $25 to $75 an hour. Content writing $20 to $60. The spread inside each of these ranges mostly comes down to one thing: specialization. A generalist sits near the bottom of every range on this list. Someone with a specific, hard-to-replace skill sits near the top of it, often for the exact same number of hours worked. 3. Platform-based gig work. Rideshare and food delivery typically net $15 to $25 an hour after expenses, meaningfully lower than the skilled freelance tiers, but with far lower entry requirements, no portfolio, no client pitch, often approval within days. That trade-off, a lower ceiling, but a near zero barrier to entry. is exactly why platform work is where most people start, not necessarily where most people should stay. A simple gut check for which stream to start with: pick the one that wouldn't feel like a second job by week 3, since consistency is what makes Stream 5's compounding actually happen. 4. Renting out property or equipment you already own, part of a home, a parking spot. Tools nobody's using. Income here varies enormously by asset and location, so there's no single hourly rate to quote. A spare bedroom on a short-term rental platform, a driveway near a stadium or airport, a pressure washer or a trailer sitting unused most of the year, all fall into Stream 4 the same way. 5. And this is the one that eventually becomes genuinely passive. Investing side hustle income instead of spending it. $1,000 a month invested at around 10% a year for 10 years grows to somewhere around $204,000. This is the only stream on this list that isn't trading hours for dollars, and it's the one every other stream on this list should eventually feed. Streams 4 and 5 are the ones marketed as passive, and both require real upfront work or capital before they pay anything at all. Building a course or a digital product means real unpaid hours before the first sale. Renting equipment or property means owning the asset first. There are real deductions that offset some of this. A simplified home office deduction of $5 per square foot, up to 300 square feet, $1,500 maximum. Vehicle expenses at 67 cents a mile for gig and delivery work. Equipment and supplies used directly for the business, a laptop bought specifically for freelance work, software subscriptions used for client projects. The business use portion of internet and phone bills. Professional development, courses, and books related to the work itself. Every deduction here reduces net profit, and net profit is exactly what the 15.3% self-employment tax gets calculated on, so tracking these isn't just an accounting habit, it directly lowers the tax bill from earlier. A freelancer earning $40,000 a year who tracks $5,000 in legitimate deductions is taxed on $35,000, not $40,000, a difference worth roughly $750 in self-employment tax alone. None of these deductions apply automatically. Either they require keeping receipts and a simple mileage or square footage log. The paperwork side of a side hustle, a passive income video, never mentions. One more that surprises people. If you're self-employed and not eligible for coverage through an employer, health insurance premiums are deductible too, a real cost most side hustle math leaves out entirely. None of this is a reason to avoid these streams. It's a reason to plan for the actual net number, not the number in someone else's thumbnail. Every one of these deductions requires the income to already exist. They reduce the tax on real money. They don't create money from nothing. Worth repeating given how often write-offs get sold as if they were free cash. At some point, a side hustle that's growing raises a real question. Does it stay a hobby-sized side project, or does it become an actual business? The IRS lists 4 common structures: sole proprietorship, partnership, corporation, and S-corporation, plus a newer one, the limited liability company, or LLC, which is a business structure allowed by individual state law rather than federal law. The core appeal of formalizing, in plain terms, is separating personal assets from business ones, so a lawsuit or a large business debt has a harder time reaching a personal bank account or a home. Your structure determines which tax return form you file, which is the practical reason this decision matters even for a small side hustle. One specific option worth knowing if you're married and running a side business with your spouse: a qualified joint venture. Since 2007, a married couple's unincorporated business can elect this status on a joint tax return instead of being treated as a formal partnership. Simpler paperwork, same 2 people doing the same work. Most people never need to formalize at all. A sole proprietorship, the default structure with no paperwork required, covers the majority of side hustles on this list just fine. The formalizing question only really matters once liability exposure or tax structure genuinely changes with scale, not the moment the first dollar comes in. Drake never separates his gig income from his personal account at all. Daniel opened a dedicated business checking account the moment his side income became consistent. a simple step that makes any future structure decision easier, regardless of which one he eventually picks. Two forms show up in this world, and they're easy to confuse. A 1099 NEC gets issued when a single client pays you $600 or more in a year for services, freelancing, consulting, tutoring. A 1099K gets issued by payment platforms themselves: Venmo, PayPal, Etsy, Uber. Once your payments through that platform cross a reporting threshold. Either way, the income itself is taxable and reportable whether or not a form ever arrives. The form is a paper trail for the ears, not the trigger for whether you owe anything. In practice, that generally means reporting it on Schedule C, the standard form for self-employment income and expenses. Confusing the two forms often shows up as double counting the same income twice on paper, or worse. Assuming no form means no obligation, both mistakes get corrected by the same habit: track your own total income independently of whichever forms happen to show up. For the quarterly estimated payments mentioned earlier, the due dates are fixed: April 15th, June 15th, September 15th, and January 15th of the following year. Form 1040-ES is the actual EARS form used to calculate and pay each of those quarterly amounts. A simple starting estimate: take last year's total tax bill, divide by 4, and adjust once actual side income for the year becomes clearer. Missing a quarterly deadline isn't just an inconvenience, it can trigger a penalty on top of the tax itself, which is one more way a side income's real net ends up lower than the number a video promised. This catches first-year side hustlers most often. The first tax season with self-employment income is usually the one where quarterly payments get skipped entirely, simply because nobody flagged the requirement in advance. The honest way to pick from this list: if you have a specialized skill and limited time, freelancing at the higher hourly rates beats platform gig work every time. If you have more time than skill right now, platform work is a real, if lower, starting point while you build towards something better. If you have any spare capital at all, Stream 5. Investing whatever side income you generate instead of spending it compounds regardless of which of the other 4 streams produced it. It's the one part of this list that doesn't depend on which hustle you pick. This is exactly the mechanism behind the FIRE movement: financial independence, retire early. Most people following it aren't relying on one dramatic windfall. They're using side hustle income specifically to accelerate a savings rate that a single paycheck alone couldn't reach as quickly. Someone saving 15% of a regular paycheck alone might reach financial independence in 30+ years. Layer in even one of the first 4 streams invested consistently as Stream 5, and that timeline compresses meaningfully. Not because of a single windfall, but because of a second income source that never stops compounding. One rule applies no matter which stream you choose: all of it is taxable and must be reported, even if it's paid in cash, and even if you never receive a formal 1099 form for it. None of these 5 streams requires quitting a full-time job first. Most people running this math successfully start with 5 to 10 hours a week, not a full career pivot. Skilled freelancing, creative work, platform gig work, asset rental, and investing the proceeds from any of the first 4 or 5 real streams, spanning driving, renting, tasks, selling, and services. Every one of them carries the same real 15.3% tax bill, half of it deductible, plus quarterly due dates and 1099 paperwork sitting on top. If the hustle grows enough to matter, a sole proprietorship covers most people, with an LLC or a qualified joint venture only worth considering once scale actually demands it. The number that matters is what's actually left, not what the thumbnail promised, and Stream 5, invested consistently, is what eventually turns any of the other 4 into real financial independence. None of it requires a viral hit or a lucky break, just picking one stream that fits the time and skill available right now and staying consistent with it long enough for Stream 5 to start compounding. This video is for educational purposes only and is not personalized financial advice. Hourly rate figures are general 2024 U.S. averages and vary significantly by location and experience. Verify current self-employment tax rules, 1099 thresholds, business structure requirements, and estimated payment deadlines at IRS.gov before filing. Subscribe for more real numbers, no hype, new videos every week on the personal finance topics school never covered. Check the playlist below to catch up on everything